Hello guys, you're welcome to this video. Alright, in this video I quickly want to do a recap of volatility 751S analysis. In one of my previous videos I showed analysis on volatility 751S and I explained some things. The market was here when we made the video. The market was around this place, I think around this place. Yes, the market was around this place when we did the analysis. When I did the video, the market was around there. Yeah, it was around there. It was around there because we were reacting to a supply zone over here. We were reacting to a supply zone over here. The market was around there when we did the analysis, and I was talking about a low being taken. That when that low is not taken, when the low is not taken, then we are not bearish yet. Okay, we are not bearish yet when the low is not taken. And actually the low was not taken. I'm trying to look for the low. So I could actually show you. I'm trying to look for the low so that you can actually see. All right, so I'm not sure I'm seeing that low over here. It is around this area, I guess. Was it there? It was. So I was talking that when the low is not taken, this eye is not safe at all. This eye is not safe when that low is not taken. Or was it around here? Okay, no. We were reacting to this supply zone over here. It was around this place, and I was talking about the low not being taken. That when the low is taken, we are definitely bearish. All right. I think it was this low. Yes, we were around this area, and I said when this low is taken, if this move actually takes this low, then it simply means that we are bearish. And see what the market did. The market did not take the low. The low was not taken, and we broke this high. We broke this particular high. We reacted to this low. We reacted to this particular low to move higher, meaning since this low was not broken with this particular move, it simply means, I said it simply means that this eye is not safe in any way. And see what the market did. The market broke this particular high. Before it came back to use this as a liquidity to continue to the upside, to get to our PO high. See what the market did. The market did not take the low, and then it took out this high before coming back to use this as a liquidity. That is exactly what the market is doing. So you have to know the devices of the market so you can know how to tackle things. You can know when to expect your break of structure. Right now, I was not going to expect this one as a break of structure because we've not gotten to our PO high. So it was actually this one I was not expecting the market to take before taking this high, and the market did not take it. It was immediately after we took this high, we came back to use this as a liquidity. If you also notice here, when the market broke this particular high, it came back, but it couldn't take this low. It came back, but it did not have strength to break this low. So it used a PO high over here to continue upward to break this high. And after we broke this high, we came back, and then we used this as a liquidity. That was not until we broke this high. So this would have been used as a This was used as a liquidity. So let's just see. Now the market goes to a particular PO high on the higher time frame. So let's see what the market is reacting to over here. Let's see what the market is reacting to over here. I think we are actually ready for a sell. We cannot really see that on the H1 time frame. Let's just go to the H4 time frame and let's see what the market is reacting to. I've taken it away from that place. Let's see what the market is reacting to at that top. Let's see what the market is reacting to at the top over there, so we can know what we are doing. So once we know what the market is reacting to, if it is a valid PO high, then I'm going to show you a minor break of structure that the market had already given to us. All right, as you can see, we've gotten to this other block. If you watch my previous video on other block, you would notice that this other block is actually very valid. This other block is very valid. So, and see, we got to the opening of that particular order block. It was exactly at the opening of that particular order block. It did not use wick. The market did not use wick. Most often on this volatility 751S, we use the opening of an order block. That is a secret you really need to take note of. So as you can see, we use the opening of that particular order block and then we are reacting to it. So let's check our 1 hour time frame. All right, we've not really had a good break of structure on the 1 hour time frame. If there is going to be any valid break of structure, it should be here. That's going to be our real confirmation entry. If there is going to be any break of market structure that will happen, that will make us know that this market is actually ready to sell for a long time, it should be this particular low. Because as you can see, check out this place. All right, we've taken liquidity and this is the low. This is low. So if the market is actually not going to move lower, it is going to react to the other block that is over here. It will definitely react to the other block that is over here to continue moving to the upside. But perhaps we've analyzed that particular place as our PO high. So let's just see what the market is doing. This is our proper break of structure. Let's see what the market is doing on the lower time frame so that we can know what we are doing and how we can tackle this situation. So as you can see, this is the normal confirmation entry, but then I was talking about a minor break of structure. See, you can see when we got to that particular PO high, we have the break of structure over here. We had the break of structure over here. This was our minor break of structure, and our minor break of structure actually took this liquidity. It took out this liquidity. It took out this high before we broke this particular lower structure, before we broke this particular minor structure rather. And you would notice when we broke this particular structure, the market did not have the strength to break this high again. The market did not have the strength to break this high again. So we eventually used a supply zone over here to continue to the downside. We broke this place. This place was a break of structure. After breaking this structure, we came back to use a particular supply zone over here also to continue to move to the downside. So we are expecting this low to be broken. We're expecting this low to be broken. Hold on. We're expecting this low to be broken. This low is not yet broken, so I cannot mark my PO high around this area. I cannot mark my PO high around this area since this low is not broken yet. If this low is broken, perhaps I'm going to mark my PO high around this area, but that's not a good confirmation for me because this low is not broken. It could eventually give me a failed low. It could give me a failed low. So I am not marking any of my PO high here until the market breaks this particular low. So my last break of structure was this particular low. So my PO high is still around this place until this low is taken. Until this low is taken, my PO high is still around there. My demand, my supply zone will still be around this place, because if this low is not taken, there is 80% probability that this high will be taken. If this low is not taken, there is 80% probability that this high will be taken. But the high I am not expecting the market to take, that will actually give me a confirmation that we are still bullish, is this particular high. this is what will still give me a confirmation that we are still bullish. If this high is taken, then I am going to have a confirmation that we are still bullish and the market is not ready to sell yet. That is exactly what it is going to give me. But then I have seen my minor break of structure at the PO high, so my risk is very, very minimal. My risk is very, very minimal. I'm not going to risk more than 3% of my account, 3 to 5% of my account. That is what I am going to risk, particularly for this trade. So I am not even going to go near close. I'm not going to go near close blowing my account or anything. I'm going to have 50%. I'm going to have like 80% assurance that I'm not risking more than 5% of my account. So if this low is not taken, then I'm not entering this trade around any PO high over here, because this is one of the mistakes a lot of people makes. This low has not been broken and they will be marking out this particular order block as a very valid order block, which is not supposed to be. So this low is supposed to be broken before you mark out this particular place as a PO high. If this low is not broken, this PO high is not valid. This is the last break of structure that happened over here. This is the last break of structure that happened over here. So I am not expecting I'm not expecting the market to just use a particular PO high over here without my confirmation. Perhaps the market can do something like that if this place is actually a strong resistance PO high. If this place is a strong resistance PO high, the market will move from PO high to PO high. But personally, I'm not going to take that trade. I'm not going to take that trade, because until we break a low, this PO high is not valid. So this is still my own last break of structure. This is still my own last break of structure. If eventually we do not take this low before a break of structure, then perhaps I'm expecting this high to be taken, but not this high. I'm not expecting this high to be taken, but for this high to be taken. So I am expecting a break of market structure over here. So I'm going to patiently wait for this market to break. Then I'm going to mark out my liquidity and mark out my PO high. Then I am going to be good to go. Perhaps I'm just going to set a limit. I'll just set a limit into the market and expect my market to take off when it gets there, and I'll put my stop loss. I'm not going to enter fully, because I don't really like entering fully with a limit. I love being in the market to see what the market will do before I just enter fully. And when we get to a PO high impulsively, I do not enter the market, because there is no PO high that should be gotten to impulsively. It shouldn't get there impulsively. It should have a slow movement back to that PO high. So I am patiently waiting for this particular market to display itself. It's not everybody that has the patience of waiting for this low to be taken. It is not everybody that has the patience for this particular low to be taken before looking for a PO high. Some people will even enter for a buy continuation. It is not everybody that has that patience, and that is why we are looking at this as our minor break of structure at PO high. This is our minor break of structure at PO high, and then we're looking for a PO high to continue moving to the downside. So if we eventually get to an area over here and the market starts reacting there, if we get to a valid PO high here and the market starts reacting and we have a confirmation that we still go up, then I am going to exit my market. I'm going to exit from my trade. I will exit from my trade if I see any confirmation that the market is reacting to a valid PO high over here. For instance, if the market comes back here and is reacting to this PO high and we eventually break a valid structure, then I'm exiting my market. But I'm not exiting with a loss. I will be exiting with a profit, at least some profits. So that is what you should also do, and that is what you should look out for. Look out for confirmation before you enter the market. So kindly share this video to your friends, let them see it and let them also learn. Kindly like, comment, and also share. Please, sharing is important. Please share to your friend, share to your family, and let them also learn. Thank you so much.